Town Bank Mortgage, NMLS number 512138, is an equal housing lender. This podcast is for informational purposes only. And now, the man born with a 5 o'clock shadow and with the NMLS number 2028-201. He is a gentleman. He is a scholar. He is
Tyler Crawley.
Welcome, everyone, to the Tuesday edition of the Markets and Mortgages podcast. I am the aforementioned host of this podcast, Tyler Crawley. And I know it's been a little while since I've been here, and I have no excuse. I never have an excuse. But this one, I don't know, does this count as an excuse? So it was my birthday on Saturday, and I decided just to kind of take the whole week off. And I was like, I'm not doing the podcast. I think I did one podcast last week. So, it was just 41st birthday, and decided to celebrate by not doing anything for the whole week. I was like pigging out, like I don't already. If you're watching on video, you'll understand. But I was like, whatever, just eating whatever, and just no podcasts. But that is over, and we are back here. So welcome everyone once again to the Tuesday edition of Markets and Mortgages. We actually have a pretty busy week. It is jobs week, so we got a lot of jobs data. You got job openings later today. Then, of course, we got the ADP report on Wednesday, initial jobless claims on Thursday, and then, of course, the big one, non-farm payroll on Friday. But we also have some other big news happening this week with the Fed decision. The Federal Open Market Committee will be making their announcement on Wednesday. They're meeting today and tomorrow, making the announcement tomorrow. Everyone expects the 75 basis point hike again, but we'll get into that a little late. Well, actually, not really. We're not going to talk about it in any more detail, but I did want to give you a heads up on what was happening. We'll talk about it later this week, not later this program. But we do have some news to get to. We did have a big report on Monday, this one from Apartment List. And it's important to watch what's happening in the rental markets as much as what's happening in kind of the purchase markets, because they definitely, they move in tandem. They move at different times, but the patterns are the same. And we know that we've seen major cooling. I don't have to tell you this. We talk about it every day. Major cooling in the housing market, but we've still seen craziness in the rental markets. Well, finally, we are starting to see that cooling happening in the rental market. So after just crazy on fire year over year increases with regards to rents, we're starting to see some major cooling off taking place. This according to the latest data from Apartment List. Month over month, the Apartment List National Index fell by 0.7% in October. That is the second straight month over month decline and the largest single month dip in the history of the index going back to 2017. It's a little less dramatic when you say when the index started. The biggest ever since 2017. So, 5 years. That's, still a record, but it's highlighting how we've gone from one extreme to the next, not dissimilar to what we're seeing in the housing market, where we saw record year-over-year growth, and now we're seeing the fastest slowdown ever on record. I mean, it makes sense, right? What goes up at record pace will also come down at a record pace year over year, despite the monthly decline. So that's 2 months of declines. Rent growth is still above pre-pandemic trends. And we're looking at about probably ending the year 2022. That would be ending this year at about 5.9% year over year growth, which is, still a big increase. I mean, usually you're looking at like 2 or 3% a year kind of in more normalized times, way down from last year when it was 18%. So that is some welcome numbers for those who are renting. And then the other good news is this is happening everywhere. It's not like isolated. This is broad-based. Rents fell in 89 of the nation's 100 largest cities in October, with Boise, Idaho seeing the biggest decline, 3.5%. That's not year over year. Month over month, rents in Boise, Idaho fell 3.5%. And that was one of those pandemic markets that just saw some record growth. And so, once again, what goes up at a record pace? Falling at a record pace. Pittsburgh, Seattle, Detroit, and New York City round out the top 5 sharpest month-over-month declines, with each seeing prices fall by more than 2% this month, which, from some of the craziness that we've seen in New York City, that will definitely be a welcome sign. And then, of course, what's contributing to this is something that we've talked about, well, I wouldn't say many a times here, but we've talked about it, and that is, what is the whole purpose of the Fed raising interest rates? I mean, they won't come out and say it, but we know that one of the effects of raising rates is slowing the economy and raising the unemployment rate. And so why does that matter, especially with regards to housing? Well, we know when times are good, economies fire on all cylinders, you're going to see more home creation, more people being able to live on their own. So someone that was maybe living with their parents, living with their roommate, all of a sudden they're making a little bit more money. They say, you know what? I'm going to move out and get my own place. And so you basically created another person who's either renting or buying. And so if you have the same amount of supply, all of a sudden now you have more people competing for the same amount of supply. It's why it's so important that we need supply to increase with the sort of creation of households. And so what happens when the opposite is taking place, when the economy is retracting, is that people who were living on their own say, you know what, maybe I'm going to move back in with mom and dad, or maybe I am going to go find a roommate, or maybe I'm going to get married and move in with someone. They're going to do something. And you're going to see household creation not only slow, but in some cases actually retract. And so that's going to do what? It's going to increase vacancy rates. So when things are good, you have very low vacancy rates. When things aren't so good, you're going to see vacancy rates starting to rise. And they have now reached, in the month of October, 5.5%. And vacancy rates have been steadily rising since bottoming out at 4.1% in October of 2021. So for a year, this number has been rising. However, 5.5% is still pretty well below the 7.2% pandemic high. So right after the pandemic started, everyone was freaking out about the economy. That's when you saw the vacancy rate skyrocket to 7.2%. It's why all of a sudden rents started dropping. It was a great time to be looking for an apartment. And then if you're looking at pre-pandemic trends, for the last couple of years, they've been slightly above 6%. And so it's great that it's risen to 5.5%, but we're still below where things were in a more normalized housing/rental market. So we've still not fully gotten back to that point, but the vacancy rate rising puts downward pressure on rents. So that is a good thing. Once again, if you're someone out there who is renting. And so what is the analysis going forward? Apartment List's research team believes prices will continue to fall, but the insanity of the first part of the year is going to keep 2022 above the pre-pandemic trend. They said in a statement, quote, "In the winter months ahead, we expect rental activity will continue to slow, and we are likely to see continued modest price decreases to close out the year. That said, we're still on pace to end 2022 with full year rent growth exceeding any year from 2017 to 2020. So they're saying, listen, this also usually happens around this time anyway, sort of a seasonality change where you see a drop in rents. But this time, because of what is happening with interest rates, inflation, everything else, you're actually seeing a situation where rent's going to fall more than just a seasonal reason, but because things were so crazy at the beginning of the year that we're still going to see growth. And that's kind of, why we're seeing rents still up about 6% year over year, but not as crazy as where we were last year when it was up 18%. So the rental markets are reflecting what is happening in the housing market, and that is major slowdowns because of demand. Supply